works. Today we're going to talk about a significant development in the world of cryptocurrency lending. TransUnion, one of the largest credit rating agencies in the world, has started delivering credit scores for crypto lending. This could be a game changer for the industry, so let's dive in and take a closer look. First, let's start by discussing what TransUnion is and what it does. TransUnion is a credit rating agency that provides credit reports to individuals, businesses, and other organizations. They have been around for over 50 years and are one of the 3 major credit bureaus in the United States. They gather information on credit histories, including payment histories, outstanding debts, and public records like bankruptcies and liens. Now, let's talk about how TransUnion's entry into the crypto lending space could impact the industry. As you may know, crypto lending has become increasingly popular over the past few years. It allows people to borrow and lend cryptocurrencies like Bitcoin. Many traditional lenders are hesitant to get involved. That's where TransUnion comes in. By providing credit scores for crypto borrowers, they can help lenders assess the risk of lending to individuals in the crypto space. This could make it easier for traditional lenders to get involved in crypto lending, as they will have more information to work with. It's worth noting that TransUnion is not the first credit rating agency to enter the crypto space. In fact, a number of companies, including Equifax and Experian, have already started providing credit reports for crypto borrowers. However, TransUnion's entry into the market is significant because of their size and reputation. They have a track record of providing accurate and reliable credit scores, which could help bring more legitimacy to the crypto lending industry. Of course, there are still some challenges that the industry will need to overcome. For example, crypto is still a relatively volatile asset class, and lenders will need to be able to assess the risk of lending to individuals who hold it. Additional security, as crypto lending platforms are often targeted by hackers. Despite these challenges, the entry of companies like TransUnion into the crypto space is a positive sign for the industry. It suggests that more traditional lenders are starting to take notice of the potential of crypto lending. And if you're interested in borrowing or lending crypto, it could mean that you have more options available to you in the future. As traditional lenders start to get involved, it's possible that we'll see more competition in the market. TransUnion's entry into the crypto lending space is a significant development that could help to bring more. Traditional lenders rely heavily on credit scores to assess the risk of lending to individuals. Without this information, it can be difficult for lenders to determine whether a borrower is likely to repay the loan on time. But how exactly do credit scores for crypto lending work? It's similar to traditional credit scoring, but with a few key differences. Crypto lending platforms will typically collect information about a borrower's crypto holdings, as well as their transaction history on the blockchain. They will also ask for information about the borrower's employment status, income, and other relevant factors. Using this information, the credit rating agency can then generate a credit score for the borrower. This score takes into account factors like the borrower's payment history, outstanding debts, and credit utilization ratio. The score can then be used by lenders to determine whether they want to lend to the borrower, and at what interest rate. Of course, there are still some challenges that the industry will need to overcome. As mentioned earlier, crypto is still a relatively volatile asset class, and lenders will need to be able to assess the risk of lending to individuals who hold it. Additionally, there are concerns around security, as crypto lending platforms are often targeted by hackers. Nevertheless, the involvement of established firms such as TransUnion in the cryptocurrency realm indicates a favorable development for the sector. This implies that more conventional financial institutions are recognizing the potential of cryptocurrency lending and are prepared to commit their efforts and capital to make it a viable option. It's also worth noting that credit scoring for crypto lending is just one piece of the puzzle. The industry will need to continue to develop reliable and secure lending platforms, as well as regulatory frameworks to ensure that borrowers and lenders are preparing for crypto lending is a promising development for the industry. It could help to bring more legitimacy and stability to the market, and make it easier for borrowers and lenders to participate. As always, we'll be keeping a close eye on this space and bringing you all the latest news and insights. Thanks for tuning in, and we'll see you in the next one.